All right, quick Fed recap of the Fed meeting today, March 20th, 2024. I'm going to go into not only what the Fed did, which was nothing, quite honestly, but what they talked about, what to expect for 2024. Keep in mind, the Fed and their policy and the Fed funds rate not only affects mortgage interest rates, it affects auto loans, it affects credit cards, it affects home equity line of credit, it affects your savings rate, it affects a lot of stuff, right? So in today's video, I'm going to talk about what the market is seeing so far, only a few hours after the Fed press conference and Fed meeting, and what to expect in 2024 based on what they said, what that's going to mean for all those different things, right? Credit cards, auto loans, HELOCs, savings rates, mortgage rates. Stay tuned. Matt, the mortgage guy, licensed in 48 states. Go to greatmortgagebroker.com, connect me and my team. That's the 5-second commercial. Let's jump straight into it. And it's funny and it kind of cracks me up. Trust me, I'm going to keep this very, very simple. I'm just going to talk about what a layman thinks about all this fancy talk when it comes to what the Fed is up to. This is how the press conference starts, and you'll see 20 seconds of this will put you to bed. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. I've almost memorized this because he said the same thing so many times. We know that's the dual mandate of the Fed. The economy has made considerable progress towards our dual mandate objectives. Inflation has eased substantially, while the labor market has remained strong. We are fully committed to returning inflation to our 2% goal. After he says that, today's meeting resulted in no change, which was what everyone expected. 99.9% chance the Fed wasn't going to raise interest rates or cut interest rates. They're going to leave things unchanged. They did so much on the raising of short-term interest rates 11 times. That was between February of 22 and summer of 23. That since they did that, they've had this plateau where they haven't changed. They haven't done a cut or an increase. It's the longest plateau since 06, 07, or second longest plateau, I think they said, right? And so anyhow, they said a bunch of stuff about, what their future plans are. I think the things to remember and the things to think about is they're not ready to cut interest rates because they're afraid that that's going to spur more inflation. They want to make sure that inflation's totally under control. If you ask me or you ask a lot of people, the first Fed rate cut is going to come June. They're meeting on June 11th. So, and a lot of people are projecting 3 rate cuts. They talked about 3 rate cuts today. So all of 2024, the latest kind of, consensus is like, will we get 2? Will we get 3? It sounds like 3 is at least for the time being what people are projecting. But more importantly than all this fancy talk, I want to talk about what these Fed policies and what this Fed funds rate, increasing and decreasing means for you, the American consumer, right? Over that period between February of 22 and July of 23, and we saw 11 rate increases over that period, where the Fed funds rate went from essentially 0 to a range of 5.25 to 5.5. The average credit card rate, like I said, it affects more than just mortgage interest rates, is up to 20.75%. It used to be 16.34%. So you're paying an extra almost 4.5% on your credit cards. New car loans, the average rate March of this year is almost double what it was 2 years ago. The average rate 787 versus 398 2 years ago. Home equity line of credit. Everyone's like, we're not borrowing on, our first mortgage, and we're not going to refinance that because the rate is so low. We're going to get a home equity line of credit. Those are like 9% on average. March of 2024. Those were sub 4% just 2 years ago. So these Fed rate hikes, 11 of them, caused home equity lines of credit, new car loans to essentially double, 4 to 8 on car loans and 4 to 9 on home equity lines of credit. Credit cards are up, over 4%. And so, as you probably know, like, it is tough on the American people. And it's not just the housing market. It's not just like, man, these higher interest rates make it hard to buy a house. It's hard to buy a car. Your credit card debt that is, eating away at you is becoming harder to manage. All of it becomes harder. So that's the thing, is that, like, inflation is hurting the average person. And so the Fed is on this mission to not screw it up, right? They don't want to have a couple rate cuts now to, spur the economy and maybe avoid, the economy sliding backwards at the expense of reigniting inflation, which I think hurts everybody. So what else do I want to talk about? I think that's about it. I don't want to make this video 10 minutes long. It doesn't have to be. Current mortgage interest rates down 22 basis points on this news. So I think the news that the markets liked, where the 10-year treasury dropped 2 points and the, mortgage-backed securities are 22 basis points better, is the speak around quite likely to have 3 rate cuts in 2024. That's all I've got to say for today. Really was a lot of a nothing burger. We'll see. Usually it takes a few days for some of these things to shake out, for people to analyze what was said, what wasn't said, what was in some of the reports. So that's it. Fed recap. Hopefully this is helpful. Let me know what I missed. Leave comments down below. Thanks for joining. And again, greatmortgagebroker.com. That's how you connect me and my team. Talk to you soon. Bye-bye.